Imagine waking up tomorrow to find that the money in your bank account, the savings you've worked your entire life for, has been cut in half. Not by a market crash you saw on the news, not by a bad investment you made, but by a single government announcement. This isn't a dystopian movie plot. This is the visceral, wrenching fear gripping millions of people in Vietnam right now as whispers of a VND exchange panic turn into a deafening roar across social media, family dinner tables, and the secretive conversations in gold shops. What you are about to understand is the real story behind the headlines. A story not just of currency valuation, but of national anxiety, a loss of faith, and a silent battle being waged for the very soul of Vietnam's economic future. The Vietnamese Dong, for years a symbol of the country's remarkable post-war ascent, is now at the center of a storm that threatens to unravel decades of progress, and the government's recent actions are not calming nerves. They are pouring gasoline on a fire that has been smoldering for a long, long time. To truly grasp why people are so terrified, you must first look beyond the numbers in the official statements. The core of this panic isn't found in the official exchange rate set by the State Bank of Vietnam. That number is a carefully managed illusion, a puppet on a string. The real story is happening in the shadowy, parallel world of the black market, where the true value of the dong is decided by sheer fear and desperation. Here, the gap between the official rate and the street rate has become a chasm, a yawning void that represents the total disconnect between what the authorities are saying and what the people believe. When you see someone willing to pay 10, 15, or even 20% more for US dollars on the black market than what the bank is offering, that isn't an investment strategy, that is a scream. It is a vote of no confidence written in cold, hard cash. This behavior is the canary in the coal mine, and right now, that canary is not just dead, it has been resurrected and is frantically trying to escape again. So why is this happening now? The triggers are multiple and they are crashing down like dominoes. First, look at the international pressure. The US Treasury has repeatedly placed Vietnam on its watch list for currency manipulation, a label that carries the threat of severe economic sanctions. While Vietnamese officials negotiate and present their case, for the average person on the street, this translates to one simple, terrifying idea. The world's most powerful economy is threatening to punish us for the state of our money. This external pressure forces the state bank into a difficult dance. They need to show strength and stability to the world. But that very act of propping up the dong depletes the nation's foreign exchange reserves, which are like the country's emergency savings account. And when people sense that this savings account is being drained to maintain a facade, their instinct isn't to feel safe, it's to run to the exits before the door slams shut. This leads directly to the second trigger, the relentless strength of the US dollar globally. As the Federal Reserve in America raises interest rates to combat its own inflation, it makes the dollar a magnet for global capital. Money has a habit of flowing to where it is treated best, and right now, that is unequivocally the United States. This creates a brutal double whammy for Vietnam. It becomes more expensive to import essential goods like fuel and fertilizer, which fuels domestic inflation, while simultaneously making it harder to attract the foreign investment that the economy desperately needs to grow. The Vietnamese Dong is caught in this global tidal wave, and the levees built by the state bank are starting to crack under the pressure. But the most potent ingredient in this toxic cocktail is not an economic indicator. It is a psychological one, collective memory. The older generation in Vietnam remembers the hyperinflation of the 1980s, a period when money became worthless paper and savings were obliterated overnight. That trauma is etched into the national DNA, passed down from parents to children as a core lesson: the dong can betray you. The US dollar and gold are security, the dong is risk. So when headlines start screaming about exchange rate panic and the black market premium spikes, it doesn't feel like a new economic cycle. It feels like a ghost returning. This deep-seated historical distrust is the kindling that allows a single spark of bad news to ignite a full-blown inferno of fear, driving the very behavior that turns the fear into a self-fulfilling prophecy, a cycle that is incredibly difficult to break once it gains momentum and begins to feed upon itself. So faced with this perfect storm of external pressure, internal fear, and the haunting specter of history, what has been the government's response? This is where the narrative shifts from explaining the panic to dissecting a high-stakes game of economic whack-a-mole, one where the measures taken to instill confidence are often the very same ones that shatter it further. The State Bank of Vietnam has not been idle. In fact, it has been deploying a classic arsenal of tools to defend the dong. But each move is being scrutinized under a microscope of public skepticism. And every action has an equal and opposite reaction that ripples through society in unexpected ways. The most visible tool is direct intervention in the foreign exchange market. The central bank has been actively selling US dollars from its national reserves to buy Vietnamese Dong. On paper, this is economics 101. Increase the supply of dollars and increase the demand for Dong and the price should stabilize. But this strategy has a critical and very public Achilles heel. Vietnam's foreign reserves are not infinite. Every $1 billion sold to prop up the local currency is $1 billion not spent on critical imports or held as a shield against a future, potentially worse crisis. The public knows this. They watch the reserve levels like hawks, and when they see them declining, the message they receive is not "or currency is stable," but "or emergency fund is running out," which only accelerates the mad dash to convert Dong into dollars, thereby undoing the very stability the intervention was meant to achieve. Alongside this, the state bank has been aggressively tightening its monetary policy, raising key interest rates to make holding Dong more attractive. The theory is sound: offer higher returns on Dong savings, and people will be less tempted to swap it for a zero-yield US dollar. This medicine has brutal side effects. By making borrowing more expensive, the central bank is deliberately slowing down the entire economy. It becomes harder for businesses to get loans to expand, for entrepreneurs to start new companies, and for families to finance homes and cars. This is the agonizing trade-off at the heart of the crisis. The fight to save the currency is simultaneously suffocating the very economic growth that gives the currency its long-term value. It's a defensive strategy that risks crippling the offense, creating a scenario where the Dong might stabilize in value but become the currency of a stagnant, struggling economy, a Pyrrhic victory that offers little comfort to anyone. Yet, the most socially explosive dimension of this crisis is not found in central bank boardrooms. It is found in the government's crackdown on the gold market, in a society where gold is not just jewelry, but a fundamental, trusted store of wealth. The authorities have launched a fierce campaign to control the gold trade, including issuing new, standardized gold bars and arresting those trading gold on the black market. The intent is to unify the market and prevent gold from being a rival safe, have an asset that pulls value away from the Dong. But the public perception of these actions is starkly different. When people see the government arresting gold traders, they don't see a leader restoring order. They see a threat to their personal lifeline. They interpret it as the state trying to force them to hold an asset they don't trust, the Dong, by taking away the asset they do trust, gold. This breeds resentment and fuels even more ingenious methods to circumvent the controls, pushing more economic activity into the shadows and further eroding trust in the entire financial system. The ultimate irony is that the government's forceful attempts to assert control can often signal a loss of control, creating a climate where every official reassurance is met with suspicion. Every policy move is seen as an act of desperation, and the collective psyche becomes trapped in a feedback loop of fear, where the defense of the currency becomes a battle against the very people it is meant to serve, a battle with no clear end in sight, and where the collateral damage is the economic well-being of an entire nation. So where does this leave the ordinary person, the family, the small business owner caught in the crossfire of this high-stakes economic war? This is the part of the story that numbers on a screen can never truly capture. The human reality that unfolds when a currency crisis ceases to be a news headline and becomes the backdrop to every single daily decision. The true cost of the VND exchange panic is measured in the quiet anxieties that keep parents awake at night, staring at the ceiling and recalculating their children's future education funds. Now uncertain if the number they saved for years will still be enough if the Dong takes another precipitous fall. It's measured in the entrepreneur who must postpone opening that new shop, the one that would have employed 5 people, because the loan they were counting on is now impossibly expensive or simply unavailable as banks clamp down on lending. It's in the heartbreaking calculus of a family deciding whether to invest in a vital medical procedure now or hold on to their dollar savings as a shield against an even more uncertain tomorrow. This crisis is silently redrawing the map of social mobility, creating a deeper chasm between those who had the foresight or the means to already hold assets in dollars or gold, and those whose entire net worth is trapped in a local currency that feels like a sinking ship. This is the ultimate erosion, not just of purchasing power, but of hope itself. The slow and grinding realization that the ladder to a better life is being pulled up just as you were about to reach for it. The collective dream of a prosperous, stable Vietnam, built over decades of hard work, is now clouded by a fundamental question about the very instrument of that dream, its money. And this societal stress test pushes people towards drastic and often risky individual survival strategies. We see a massive surge in the pursuit of cryptocurrency, particularly stablecoins pegged to the US dollar, as a digital life raft to escape the volatility of the Dong. This is a breathtaking technological leap for many, a move from tangible gold to digital wallets, driven purely by desperation and a search for a sanctuary that the traditional financial system is failing to provide. We see a frenzied push into real estate, not as a home, but as a hard asset, inflating property bubbles that make cities like Hanoi and Ho Chi Minh City increasingly unlivable for the younger generation. The entire economy begins to distort itself, shifting energy away from productive investment and towards speculative hoarding. A nation that is starting to spend more time and mental energy protecting the value of what it has rather than building the value of what it could become. This is the invisible tax of a currency crisis, a tax on optimism, a tax on ambition, a tax on the future itself. The path forward is shrouded in fog, but it is clear that technical solutions from the state bank alone are no longer enough. Raising interest rates or selling dollars can treat the symptoms, but the disease is a profound deficit of trust, healing that requires something far more difficult than economic policy. It requires a radical transparency, a consistent and credible communication strategy that doesn't just tell people what to do, but honestly explains the challenges and the trade-offs. It requires building institutions that people believe in more than they believe in the black market gold trader. The future of the Vietnamese Dong, and by extension the future of Vietnam's economic miracle, hinges on this fragile psychological frontier. It's a battle for confidence, and right now, confidence is the scarcest resource of all. This is not just Vietnam's story, it's a cautionary tale for any emerging economy in a world of a dominant US dollar and volatile global capital flows. What you've just heard is the deep, unfiltered truth behind the VND panic. If this explanation resonated with you, if it connected the dots in a way you haven't seen before, then you cannot be a passive observer. Your understanding is your power. So I am giving you a direct call to action right now. Share this video with everyone you know. Share it with your family, your business partners, your friends. Put it in your social media feeds. This isn't about views. This is about awakening. Most people are reacting to the symptoms without understanding the root cause, and that fear is what fuels the very cycle we just dissected. By sharing this, you are not just sharing a video, you are sharing clarity. You are replacing panic with perspective. You are arming your community with the knowledge they need to see through the headlines and make informed decisions about their own futures. Be the person who shares the signal through the noise. Click the share button now, and let's start a conversation based on reality, not fear. The next step, the solution, begins with a population that is truly informed.